There hasn't been a new asset class since the bond market was created in 1693. Well, now there's a new asset class, and it is the digital asset space. The question is, are you participating? Hey, what's going on, guys? It's the Crypto Siege with another day in the life and the crazy life that is the digital asset space. Good morning. Happy Monday to each and every one of you. It's good to see you today. Yeah. Oh, what happened? Going to do a quick one here. And then I got an appointment that I have. Hold on. Love you. A little too loud for Miss Crypto Siege. Yeah, I got an appointment to get to. So, well, really excited about that. Moving further moving along nicely on the sound savings instrument. Really excited about that. The dividend paying whole life insurance policy. Real excited about moving forward with that. So I got an appointment at 11 a.m. Central Time. So I'll have to, just will be a quick one, but so that I can get to that, hop on a Zoom, go over the contracts. This is like our fourth call now. So I love the process. I love that it's, I love the homework prior to as a necessity. In other words, I'm not here to move a product. I'm here to educate on a sound saving instrument. If you're not willing to educate yourselves first, we can't be a partner in a partnership. I like that concept. Loved it. Little did he know, I had already done all of those things already. He didn't even know. That was really cool. So anyway, guys, good morning to you. Happy Monday. Good to see you guys on the stream today. I got to tell you, Brad Garlinghouse speaks out. How about that? So yeah, I came across the crypto hedge fund, a PDF, and I thought I was interested to share a little bit of that. Shout out to XRP Darren Moore. I am a proud member of his Patreon. You get some really great information there. Can you find it somewhere else? Probably. But if you value your time, you take advantage of Patreons, right? Right? You take advantage of that. So he puts out some really good stuff. Discord is absolutely awesome as well. So guys, let me see. Billionaire H was first. What's up, Billionaire H? Good to see you. XRP Joe is in the building. Good to see you, XRP Joe. Guys, make sure if you haven't already to subscribe and hit the XRP Joe channel up and subscribe and check out his stuff there. He's doing his thing over there. It is cool to see. Oma Rose is in the building. How are you? Rod Hop is here. Morning, bro. Good to see you in the stream. Crawfish XRP, Dubian 2 is here. What's going on, fellas? Good to see you guys. TJ Jackson's in the building. What's up, TJ? Lucky Lloyd is here. What's going on, Lucky Lloyd? Good to see you this morning. D. Kirchner's here. Frank McGillicuddy. Morning, bro. Good to see you, Frank. Good to see you. Maybe sober. What's going on? What do we got going on here? Oh, really, TJ? Okay, that's cool, TJ Jackson. Thank you, man. I appreciate that. That's always nice, right? That's the deal. What we're trying to do, and I appreciate you taking the time and effort, bro, to put that out. What we're trying to do is we're trying to get more and more people, more and more of us, if you will, in this. Right? We need more of the average Joes and the average Janes in this space. Why? Because this is our chance to win. So, like my mentor always says to me, what you do matters. Like a lot of times people think it doesn't matter, that they'll take the time and they'll share a tweet on Twitter, Crypto Siege is live. It matters. It's not because of Crypto Siege. It matters because you took the time and effort to do something. You could reach someone by doing that, like TJ Jackson's doing. He's sharing this on his Facebook, right? It matters. He just said, let me share it. TJ Jackson said, just share to my Facebook. Found out some of my friends really do tune in, right? Really do tune in. And so that's important, right? That we need more of the bank tellers and the truck drivers, right? We need more of the waitresses. We need more of the small mom and pop shop business owners, right? We need more people in this space, right? Because this is our chance to win. Never, ever, ever in the history of finances has there been an opportunity like this where you and I, none of this accredited investor stuff, none of this being part of the old boy network or any of that madness. We all have an opportunity to win here. And not only that, especially if they tune into this community, they have an opportunity to level up their XRP IQ. They have an opportunity to level up their financial IQ. They have a chance to level up the overall IQ of the digital asset space. So guys, what you do matters. Never let anyone try to convince you of that otherwise. It matters. What you do matters. In every area of your life, financially, health-wise, socially, what you do today matters, and it adds up, right? We call it the slight edge, right? In our business, we call it the slight edge. Anthony King's in the building. Who is this Christopher Green guy? I don't know who Christopher Green is. Is that the guy who was a BTC guy and now is on board with XRP? I believe that might be him. That might be that guy. Is that right? I believe that might be him. So, and thank you again, TJ Jackson, for doing that. Absolutely. So when you take the time to hey, Crypto Seizures live on Twitter and share the stream, yeah, it matters. And hopefully I'll share enough value, provide enough value that people will come back, right? That is real ultimately the deal. Again, it's about, for me, it's always been about getting more of us in this space. So guys, so let me share a little bit. I didn't go over this PDF, but I think it's an interesting find. So let's share this it's from PricewaterhouseCoopers. And their kind of input and review, if you will, of the crypto hedge funds. And there are literally crypto hedge funds, and they separate them from other hedge funds that are involved in the digital asset space. So let's share the screen. 22 people on the stream, guys. Don't forget to hit the like and subscribe. So here it is, the PwC Elwood Annual Crypto Hedge Fund Report, May of 2020. The 2020 Crypto Hedge Fund, the Hedge Fund Report from PricewaterhouseCoopers and Elwood. Introduction, there's some key takeaways, survey data. Let me go over the key takeaways first. Introduction to Crypto Hedge Report. Is he going to say key takeaway? Okay, good. Let me tell you what the intent of this report is. Introduction to the Crypto Hedge Fund Report. In this report, we provide an overview of the global crypto hedge fund landscape and offer insights in both quantitative elements such as liquidity terms, trading of digital assets and performance, and qualitative aspects such as best practice with respect to custody and governance. By sharing these insights with the broader crypto industry, our goal is to encourage the adoption of sound practices by market participants as the ecosystem matures. The data contained in this report comes from research that was concluded in Q1 of 2020 across the largest global crypto hedge funds by assets under management. This report specifically focuses on crypto hedge funds and does not include data, check this out, does not include data from index tracking, passive funds, and crypto venture capital funds. They're not messing about the little the little stuff. That's funny. This is about crypto hedge funds. So let me share some of the key takeaways. By the way, this is about a mass adoption. I'm talking about PricewaterhouseCoopers, right? PricewaterhouseCoopers, something like that. Right? PwC, the same people hooked up with VeChain, right? So this is some serious stuff. Again, this is exposure. This is about adoption. This is about the powers that be recognizing that this space is here and it's here to stay. So here are some of their key takeaways. Size of the market and assets under management. We estimate that the total asset under management of crypto hedge funds globally increased to over $2 billion in 2019 to over, it doubled from 1 billion the previous year. With the percentage of crypto hedge funds with an asset under management of over 20 million increased in 2019 from 19% to 35%. Right? It's a done deal. This new asset class is a done deal. And you, my friends, are early. You guys hold digital assets that crypto hedge funds would like to have. And you have them. It's powerful. I'm telling you guys, it's powerful. The average asset under management increased from 21.9 million to 44 million, while medium assets under management increased from 4.3 million to 8.2 million, nearly double. The median asset under management at fund launch is 2 million, indicating that funds have generally seen a 4x increase in assets under management in 2019. How about that? That is pretty cool. Performance and fees. The median crypto hedge fund returned 30% in 2019. 30%. But in 2018, it was 46%. How about that? 46%. Wow. The median of the best performing by strategy in 2019 was discretionary long only, plus 40%, followed by discretionary long short, plus 30%, quantitative, 30%, and multi-strategy, 15%. So that was basically how they decided to run that fund, whether they were long and short, whether they had a multi-strategy, right? So that's interesting points there. Long plus 40%. Median management and performance fees remained unchanged at 2% management fee and 20% respectively performance fee. Wow. 20%. Although the average management fee increased from 1.7 to 2.3%, and the performance of the fee decreased from 23.5 to 21.1%. Yeah, isn't that interesting? So, yeah, so that's a little on the, I just rather let you guys kind of figure this out. I'll just give you guys the cash, right? They don't want to do their own homework into the space, but cool. 65% of crypto hedge funds have either a hard or soft lock, and 63% have either an investor level or fund level gate, which is entry. Investor level, fund level gate. All right, so investor type and average ticket size. That's an interesting stat. So the investor type and average ticket size. The vast majority of investors in crypto hedge funds, 90% are either family offices or high net worth individuals. So family office, 48%, high net worth individuals, 42%. Interesting. The median ticket size is 0.3 million. 0.3 million, while the average ticket size is 3.1 million. Almost 2/3 of crypto hedge funds have average ticket sizes below 0.5 million. 0.5 million. Crypto hedge funds have the median of 28 investors. Fund strategies, activities, and trading. They got governance on here. We're going to go over that. Fund strategies. The most common crypto hedge fund strategy is quantitative, followed by discretionary long only, discretionary long short, and multi-strategy. Most crypto hedge funds trade Bitcoin, followed by Ethereum, and then XRP, and then Litecoin, then Bitcoin Cash, and then EOS. Interesting, EOS. So Bitcoin is first, 97%, followed by Ethereum, 67%, followed by XRP, 38%. These are hedge funds. Hedge funds, right? One might argue, if we're thinking and acting like financial institutions, if we're becoming our own banker, by the way, and controlling the banking function in our lives, right? You might want to look at their strategy a little bit. Huh? What do you think? What you think? What do you think? What you think? About half of crypto funds, crypto hedge funds trade derivatives, 56%, or active short sellers. Okay. Crypto hedge funds are also involved in crypto staking, lending, and borrowing. They can act like financial institutions, like we like to say on Generational Wealth Wednesdays. Crypto hedge funds are also involved in cryptocurrency staking, lending, and borrowing. How about that? I might have to get a little bit of Litecoin just so I can continue to think and act like crypto hedge funds. Isn't that interesting? What do you guys think about that? That's some interesting stuff there. Let me get back to the chat. What do you guys think about that? That's pretty interesting stuff right there. Right? XRP for life 2020. What's going on, bro? Good to see you on the stream. I don't think I've seen you here, my dude. Appreciate you being here today. Where are you checking in from? XRP for life 2020? Interesting. Isn't that interesting? We got Litecoin and EOS in there, crypto hedge funds, right? And you know, they operate on the, I don't know, I feel like they operate on less and less of the risky and more on the safer and conservative, right? Talking high net wealth individuals that they're dealing with. We're talking about family offices, right, that they're dealing with. They don't want to, right? Absolutely. Absolutely, XRP show. Let me share that. Interesting points, right? Going mainstream for sure with what you just read at Crypto Seas. Absolutely. If there in fact are crypto hedge funds, yeah, I mean, it's over. It's a new asset class, guys, being created. It's a new asset class being created, and it is the digital asset space without question. Oh, you're in VA. Very cool. Good to see you, bro. Good to see you. Absolutely. VA is in the building. No, I didn't hear that. Boiling Crypto, they're paying actors in Litecoin. I did not hear that. But guys, if you're of the mindset of thinking and acting like financial institutions, if you're of the mindset, like we talk about all the time, controlling the banking function of your life, right? If you're of that mindset of like crypto hedge funds involved in staking, lending, and borrowing, right? You might want to look into a platform like Celsius Network. Right? You might want to look into those. That a platform like Celsius Network. This description is always in the a link is always in the description of my videos. Because I've always said from day one, I like Celsius because it allows me to think and act like financial institutions. There you go. I like that. XRP for life. I'm so blessed for the space to allow me to build my badge for 2 years. Yep. Thank you. Lift off is soon. Absolutely, bro. Good for you, bro. Good to see. Early adopter, man. You're an early adopter of an entirely new asset class, man. It's a blessing. We are blessed. That's why I always say this should be for each and every one of us. This should be in this moment in our lives, a head up, shoulders back moment for us. It really should. D. James is in the building. What's going on, D? The Boiling Crypto is here. But that's some interesting stuff. And I just started reading this PDF. But again, that's what we want to do, isn't it? Isn't that what we want to do? Think and act like financial institutions? That's exactly right, XRP Joe. XRP Joe says XRP is the most recognized crypto by governments and financial institutions around the world. And the hedge funds are into Bitcoin and Ethereum because they understand supply and demand. They understand first movers advantage. And it's without question, they've probably been in this space for 3-5 years. Even though I said most of it started 2018 and 19. What else we got here? XRP is like my other coin, but that's okay. I want to keep piling up at a low price. Yeah. I was listening to Kevin Cage yesterday, late last night, in fact. And, he said he made an interesting statement about something about the people that he knew in these particular places, higher places. And it's almost as though, it's always been to keep this price for as long as we can where it is until everything's ready. And then it makes sense. You how can you not think something's going on? Something's not going on when, a little bit of news about this particular thing. Cardano, 50%, just because the mainnet's up. They got a mainnet or Shelly announcement or something. 50%. No, zero, none, nada. Active working partnerships, active working, hey, this particular company, enterprise, small and medium enterprise using Cardano, none, zero, none. Just a mention of Shelly or a particular date for Shelly launch, I believe what it was, is what it is, 50%. And yet, partnership after partnership after partnership, Exchange, Bitso, GoLance, GoMama actually switching over from the Stellar blockchain to the Ripple blockchain, right? These corridors lighting up, MoneyGram, nothing. You got to think about why that is and understand that it's not like with MoneyGram and using ODL and Bitso using ODL that they aren't using it. It was made up. It's not made up. They're using it. So if they in fact come out on stage and say that they're using it, then why not the change in price? It means that something bigger than them is keeping the price where it is for a reason. Right? That's how you make sense of it. Something bigger than them is keeping it at these prices for a reason. And the other part of that is, why aren't they mentioned in XRP? Why isn't it talked about? You got to think about that. Exactly, XRP Joe. That's exactly my point. You got to think about that and understand, and I get emotional about it and understand that there must be something bigger going on. Cardano, 50% in the last, I believe, 30 days. Over, an announcement date, I believe, for Shelly, the Boiling Crypto. I believe that's what it was. So when you realize that, when you get that there's just, there's something bigger going on. There's something bigger going on. When you understand that is taking place, then you say, wow, this is just a great opportunity if you're in a position to do so, to accumulate. I mean, it's a blessing. It's a blessing. Right? It's a blessing. Right? It's a blessing. And when you got another part of that is, why keep the price the way it is? What's the point of that? What's the bigger picture? I just believe it's going to be a flip of the switch type of deal. I really, really do. Anybody see the I can't tell if this video is old or not. Maybe it is, but maybe it is. Ashish Burla and the senior vice president for a product, I believe. You guys see that video? It's on Twitter today. Did you guys see that? Hear that? Talking about ODL and liquidity in the different markets that they're in. Not a bad listen to. It's not a bad one, but let's go over this more of this PDF before I have to get off here. All right, so they're talking about the governance here, which is interesting. The percentage of crypto hedge funds using an independent custodian increased in 2019 from 52% to 81%. Wow. Maybe not a bad business to be in. The percentage with at least one independent director on their board increased from 25 to 43%. Interesting. The percentage of crypto hedge funds using third-party research increased from 7% to 38%. 86% were using an independent fund administrator in 2019. Independent fund administrator. Yeah. Funds tend to be domiciled in the same jurisdictions as traditional hedge funds, with the top three being the Cayman Islands, the United States, and the British Virgin Islands. That's not going to change. Over half of crypto hedge fund managers are based in the United States, followed by the United Kingdom. Oh, but that's a big disparity there, 52% to 15% in the UK. Interesting PDF. Our Q1 2020 is a strategy insights. Research shows that there are around 150 active crypto hedge funds. And again, this doesn't include the, the capital venture funds and different things like that. Okay. Like Arrington or Michael Arrington or something like that, I would imagine, or maybe Digital Currency Group. Almost 2/3 of these, 63%, were launched in 2018 or 2019. 63% launched in 2018 or 2019. As shown by the graph above, the launch of actively managed crypto funds is highly correlated with the price of BTC. The Bitcoin price spike in 2018 appears to have been a catalyst for further crypto funds to launch, right? They saw the money. We can also see a material decline in new fund launches as crypto markets trended downward at the end of 2019. Of course, why would they, right? How are they going to move and sell this particular product to their high net worth and ultra high net worth clients if BTC is on the downward trend? It wouldn't make much sense, right? So this year we have classified crypto hedge funds according to 4 broad fund strategies: discretionary long funds, which are long only, and whose investors have a longer investment horizon. These funds tend to invest in early stage token coin projects, and they also buy and hold more liquid cryptocurrencies. These funds tend to have the longest lockup period for investors. Remember, we read earlier, these crypto hedge funds are involved in staking, they're involved in lending, and they are involved in borrowing. Celsius Network allows you to do all three of those things. In essence, discretionary long and short funds, which cover a broad range of strategies, including long and shorts, relative value, event-driven, technical analysis, and some strategies which are crypto specific, such as mining. Discretionary funds often have hybrid strategies, which can include investing in early stage projects. Now, quantitative, I did not know what that is. Let's take a look. Funds taking a quantitative approach to the market in either a directional or a market neutral manner. Indicative strategies include market making, arbitrage, and low latency trading. Liquidity is key for these strategies and restricts these funds to only trading more liquid cryptocurrencies. And then, of course, the multi-strategy. Funds adopting a combination of the above strategies, for instance, within the limitations set in the prospectus of a particular fund. Traders may manage discretionary long, short, and quantitative sub-accounts. So the vast majority of these funds, looking to this data, the most common strategies of crypto hedge funds, the overwhelming majority is doing the quantitative approach. Isn't that interesting? And followed by, so the quantitative is like 46%. The discretionary long only is second, and it's at 18%. Isn't that interesting, the approaches that they're taking? Again, guys, think and act like an institution. That's what we're looking to do. That's what we're hoping to do. The market analysis. This year, we asked funds to categorize their investors' base. Below, we can see that the most common investor types, almost 90% of all investors, are either family offices or high net worth individuals. In fact, none of our respondents cited pension funds, and only a handful had foundations or endowments as investors. Interesting. Somewhat surprisingly, we see that the share of investors that are venture capital funds and funds of funds is small by comparison. So the big money is where most of the crypto hedge funds are dealing with the high net worth individuals and or ultra high net worth individuals, which is basically family offices. Very nice. Nice chart here. Assets under management. That's very, very cool. Yeah, the increase is significant from 19%. The above graph shows us that the percentage of crypto hedge funds with assets under management of over 20 million in 2019 increased from 19% to 35%. This is not surprising. Funds with a larger asset under management tend to attract not only new investors, but larger ticket sizes, as many investors are restricted from representing more than 10% of the asset under management due to concentration risk. The fund performances. 2019 year-end crypto hedge fund performance by strategy, the long short average 33%, the median 33%. the discretionary long only, right? That long-term strategy, but they're looking at it in a long perspective, not short. 42% average and 40% median over the longer term. Very interesting. So, I read that. An interesting takeaway from our survey is that there is significant survivorship bias. Survivorship bias. For example, the median crypto hedge fund performance minus 46% or 46% in 2018. However, the median 2019 year performance of the funds that are included in this year's report is 74%. This provides very clear evidence that funds significantly underperformed during the previous year had to shut down. This is particularly relevant when we consider the small asset under management of crypto hedge funds. Their average management fees discussed below are not enough for them to break even. Wow. This can only be achieved with strong performance fees. So that fact 2018, right, when the market wasn't doing so well. Wow, look at that. Very good. So what does this say? In the chart above, we compare performance by strategy rather than by fund to mitigate the survivorship bias caused by the funds that closed during 2018 and 2019. It is clear that Bitcoin plus 92% outperformed all hedge fund strategies in 2019. While these strategies were able to mitigate the effects of the 2018 crypto bear market, they did not exceed in replicating the upward trend of 2019. In summary, they acted as volatility reducing tools rather than performance enhancing catalysts. Ugh, fees are yuck. Management and performance fees, important to understand what it looks like. What does that look like? And because we're early, because we've been in this thing since 2016, right? Right? Their strategies, right? Because we're early, we know of platforms that, right? So we know the whole custodian thing right now. Sure, it's Ledger for most people and Trezor and AliPal. I get it. Right? But are we taking advantage of the other things that are available, like staking and lending and borrowing, if you so desire to do such a thing? Are you leveraging and thinking and acting like financial institutions, right? That is so very, very important to understand, minus these fees. Right? We're not having to pay management fees. We're not having to pay performance fees, right? Because we're early to the game. We've decided to take the risk upon ourselves to hold our own digital assets. We've decided to, however, we take that risk in dealing with platforms, whether it be BlockFi and Nexo, which I'm not a fan of either one, or Celsius Network, where we understand it's always a risk. But is it a calculated risk versus these fees? Look at the fees here. I mean, it's pretty significant. When you start accumulating more and more digital assets, the fees become greater because it's based on the accumulation. Right? So that's very important to note. All right, guys. I hope you enjoyed this. We're going to go over some more of this later on today as well. Guys, think. Let me get back here. Think and act like financial institutions. That's what we are. That's what we have the opportunity to do, today. We have the opportunity to think and act like financial institutions. We are most likely more versed than they are on EOS. That's why the researchers, the independent researchers that these hedge funds were using went up. They went up because they are not as well versed as you and I, and they're seeking the information. But we know about EOS, right? We know more about BTC and Ethereum and Litecoin and XRP than they do. This is what I mean by you and I are playing a game that 99.99% of the masses don't even know is being played. And we're winning, by the way. We're winning. Julian Valentine Edom. Well, appreciate you being here, my friend. Good to see you. Hope you're having a great day. All right, guys, listen, I got to wrap up. I have to hop off here. I got another call, kind of solidifying my sound savings instrument. Really, really excited about being able to do that today. Yeah, it's going to be a cool deal. I will report back to you how that went. Really looking forward to talking with this guy and setting this up. Really cool deal. Thank you, Julian. I appreciate that. Don't forget, my friend, to hit the like button and subscribe if you haven't already, Julian. Appreciate you being here. TJ Jackson said, appreciate you, Siege. We need people like you in the space. Good, my man. Thank you, bro. Thank you, TJ. I appreciate you being here, my dude. Really do. Appreciate everything that you do for the channel and all the mods here. I appreciate you guys big time. All right, guys, listen, I am going to wrap up this video or this stream like I do all my streams and remind you guys of this. Old money doesn't want you to win. They don't want us to win. They would rather us remain a cog in their perpetual wheel of trading our time for dollars. They don't want us to play in the same playground that they play in, where we allow our money to work for us. This is our chance to win, guys. The digital asset space is our chance to win. We are in the midst of the greatest transfer of wealth in the history of man. Are you participating, or are you standing on the sidelines? Here's what I do know, that the battle for you has already been fought, and the victory is yours. Go get it. I'll talk to you soon, guys. See ya. Bye.